All right. Hey, everybody. Happy Thursday. Happy Thursday. It's Thursday, right? Yeah. Happy Thursday. All right, y'all. So listen. How y'all feeling? I know I've gone live on multiple platforms. Just doing a quick check-in, with everything that's been going on these past few days, right? You know, um, There we go. With everything that's been going on these past few days here in the United States with the elections, and we now have our president-elect, Donald Trump, has been selected as the 47th president of the United States of America, second time around. So, listen, like, what's the game plan? That's my question to you. Regardless of who's in office, what is your game plan for the next year? What is your game plan for the next 5 years? What is your game plan for the next 10 years? A big part of this series is helping us to get to the point where we are more consistent with strategizing. We're more consistent with planning. We're more consistent with brainstorming, researching. We're more consistent with these things. So trading is much bigger than just going into the market and making money. It helps us in other areas of our lives, so we can be more successful all around, right? And so hopefully everyone that has been tuning in to this series, like, this really makes sense to you and it applies in every way possible. You know what I'm saying? So I hope that, despite whoever you voted for, if who you voted for is in office, or if who you voted for is not in office, y'all, please don't let that stop you from doing what you know you're supposed to do. Okay? Seriously. We know who the president is going to be. We know who is going into Congress because you voted for him. Or if you didn't vote, then you probably don't know, but you have everything in front of you now. So what do you do with it? Okay. So, y'all, this series is going to help you with making money during another Trump economy. Okay. Although I may not be going into detail as to, like, what specifically I'm trading, why I'm trading that thing and whatnot, I'm not going into that on this series, but I do have something for everyone because I created it like yesterday afternoon, just after me doing a bit of sitting, thinking, asking myself questions, and whatnot. And so I did some research and everything, and I put together a watch list. Okay. So for those of us that trade in the foreign exchange market, cryptocurrency market, even for those of you that trade in the stock market, there's a few things that, in me sitting down, researching, and just, being obedient, I should say, I put together a watch list. Okay. So I'm going to update. I wasn't going to do it, but I'm going to update the description of this video, and I'm going to put the link in there. So that way, if you want the watch list, the Prosperity Calls watch list, you can actually click that link and you can get it for free, y'all. Look, I'm giving away a lot of information for free, but one thing I know is, like him or not, okay, investors with big money, big corporations, all of that, they love him. And this is going to present massive trading opportunities and investing opportunities for us. So we may not have billions right now, okay? However, we can still move like the billionaires with what we have. Got it? Okay. So now I got that part out the way, y'all. I'm not going to, continue to go down that path because y'all know how I am. I'll keep going in a heartbeat. And we'll be on here for like 2 hours. And y'all be like, God dang, Leon, like, weren't you supposed to be talking about some emotional control and stuff? So I'll say that conversation for the prosperous ones, those part of the Prosperity Call community. All right, I need to get myself back on track. Okay. So I want to thank everybody, number one, for tuning in to this live stream. I really appreciate y'all. If this is your first time coming onto this YouTube channel, thank you and welcome. Okay, I appreciate you. I'm really excited to have you, and I would hope that, you return, of course, because you took really great notes. You went and applied those notes, and then you received the results that you were seeking. All right. And feel free to come back and put, what results you received. All right. Put that in the comments. All right. Let it be known, like, yeah, I did what she said, and this is the result of it. Okay. So yeah, I know, you all have plenty of options though, for real. And I appreciate everybody that is still supporting me, and coming onto this YouTube channel, commenting, liking, sharing, all of that good stuff. I really, truly appreciate every single one of you. Okay. So let's keep this going. I hope y'all are ready for the final discussion of this series. Who is ready? If you're tuning in on the replay, still type the word ready. If you're tuning in live, still type the word ready. As a matter of fact, y'all, do me a favor. Let me know where you're tuning in from. Put your city, put your state, put your country, rep your country, okay? Put that in the chat for my people watching the live, and for my people tuning in on the replay. I need y'all to do the same, okay? Don't forget, on Facebook, hit the like, hit the heart, whichever one is comfortable for you. On YouTube, though, I need you all to hit the thumbs up, okay? Then you can heart, and everything when something really resonates with you and your spirit. All right. On top of that, y'all, please don't forget that if you have not done so yet, subscribe to this channel, especially if the value is there for you. If you're like, yes, I'm learning a lot, I'm getting much better, I'm becoming more confident as a trader because of the information. And hit that notification bell, especially if you're not part of the Prosperity Cause community. Because listen, you won't get the email notification. You won't get the text message. You won't get any of that. So if you hit the notification bell, you'll know when I'm live, okay? And y'all, listen, don't be selfish over here, okay? We're sharers. I'm a sharer. I am sharing free information with you all because someone shared with me at some point, and I've also paid, but someone paid before me, so I want to pay it forward. All right, so sharing is caring. Share with at least 1 to 2, traders that or aspiring traders, people who want to get in the market, but they don't really know, who to trust, because there are a lot of people out here. I got it. So they can see if I'm their cup of tea, okay? So let's get into this disclaimer. Let me read this real quick, y'all. Let me go to it. All right, so remember, y'all, trading and investing in any market can contain substantial risk and is not suited for every individual. Every trader and investor learns and performs differently, thus the results will not all be the same. There is a potential for a trader and investor to lose all or more than their initial investment due to numerous factors. Therefore, it is suggested that each trader and investor only invest money that can be lost without jeopardizing their financial security and or lifestyle. Remember, y'all, I am not a financial advisor, nor am I a licensed trader. Okay, I am only sharing information for educational purposes for viewers to do their own research. Remember, all traders and investors that utilize strategies discussed, services, and products shown will do so at their own risk. Past profits do not guarantee future results. Okay, remember, y'all, this information is for educational purposes only. Okay, got it? Y'all got it? Great. Now, I have notes to keep me on point, because I know me, especially my brain is really, really working overtime right now. Because it's like so much stuff that I'm working on, things that I want to do. So I'm attempting to prioritize those things. And so I have notes to just keep me in one direction so I don't veer off and be like squirrel, you know what I'm saying? Because that's where I'm at right now. Okay. So for those of you that have just been introduced to me, my name is Leona Clark. I am a wife. I am a mother. I am also a retired Army veteran who did 20 years active duty in the Army, straight out of high school, went straight into the Army. And I have been blessed and very fortunate to have been trading in the forex market for the past 5.5 years. Okay. And 3 of those have been full time. Now, I have been trading in the cryptocurrency market. I would say more so, like, more serious in the cryptocurrency market for the past 4 years. Okay. Even though I was introduced to that first, I got serious about that around 2020 is when I really was like, okay, crypto is what I really want to trade too. Okay. And also, y'all, I've been very grateful, fortunate to thanks to God on this, to be able to connect with a lot of, hundreds, and not, I wouldn't even say hundreds now, I would say about thousands at this point. Service members, other service members, parents, college students, even high school students that I've been able to join their trading journey, like just be along there, whether that's through tutoring or through my own trading program. So due to a lot of the things that I've experienced in my journey, especially in the beginning, things that I wish I would have known, teaching that shouldn't have been taught to me because I was a beginner, things of that nature, I share those things with you all, especially on this YouTube channel. I share those things with you all, and that's part of why this series was created, because if you're new or being introduced to trading, especially in the foreign exchange market, there is a in my opinion, there's a better way to learn versus some of the things that I was taught. And I'm like, oh my gosh, that definitely should not have been taught to a beginner. Okay. So those are things that I'm sharing with you all during this series. All right. So if you've been tuning in, kudos to you. If you've been tuning in and you have learned something in the past 4 parts of this series, y'all, do me a favor and let it be known. As a matter of fact, type the word me. Type the word me, M-E. Put me in the chat for those of you tuning in live. If you're watching replay, do the same thing, right? Put me in the chat or in the comments if you have learned something in the past 4 parts of this series, okay? And I definitely want to say thank you all for watching the replay too, because there have been a good number of people who have been tuning in to the replay and sending me messages, you know what I'm saying, commenting on the videos and everything. So I appreciate y'all. Y'all are like some really great people, man. Like, anyway, let me stay focused. All right, focus. So let's do a quick recap, okay? Let's do a really quick recap of part 4. So before we get into our topic for today, all right. So a couple of things that we covered in part 4. Number 1, we talked about risk management. Risk management, risk management, risk management. What is it, y'all? That's one of the things we touched on. Just making sure that people knew risk management and the process of this. And that is, identifying, assessing, and controlling the amount of risk involved in any given trade. This is key and very huge because it's something I didn't understand early on. I didn't have a really great understanding of it early on. Then we also went into key risk management concepts. One of those concepts was risk to reward ratio. So I broke that down to you all, letting you know that the risk to reward ratio is simply understanding the risk and how much we are actually willing to lose on any trade, and knowing the reward that we expect to gain at the same time. Okay. And also covering why risk management is so crucial. I gave y'all 2 main points. Okay. One of which was that it improves consistency. My nose is really itching. Oh my gosh. But it improves consistency. And this is, just giving us the ability to consistently use a positive risk reward ratio. So that way we don't have to be right all the time, y'all. Who out here really wants to lose a trade? No one. But when we are practicing that risk to reward ratio and we're looking for like a 1 to 2, 1 to 3, 1 to 4 consistently, now we can take more lessons in the market, but still in the day, in the week, in the month and year in profit. Okay. So that risk to reward ratio, it just ultimately helps us to have a lower win rate, but also still getting a larger reward from those winning trades. Okay. So that just helps us to maintain an overall profitability every single month after month. All right. The second key concept of risk management was risk control. Okay. Or why risk management is crucial is risk control, because it forces us as traders to manage our properly by limiting how we're willing to lose on a trade. And this helps us to set reasonable goals for profit, y'all. So at the end of the day, this just helps us as traders to avoid trades that aren't worth the risk? Is the juice worth the squeeze? That's what I ask myself every single time that I'm going to the market and I'm considering trading, okay? And then the other thing we talked about was stop loss and take profit. So I told you all, stop loss is just a tool to help us to automatically close a trade that's not going in our favor, is moving against us. Our brokers will do that for us when we put that price point into our broker account, okay? The second thing was take profit, which is what I mentioned. This is a level where us as traders, we're going to be able to identify this in the market, and we're going to put the number, that price point, into our broker account, and our broker will automatically close our trade when our desired profit is reached, okay? And then they're going to update our account balance just like they would with the stop loss, update our account balance, and now we see that we are in it either in profit at the end of the day, or if we've taken more lessons, then we have wins and our risk to reward has not been that great, then we will see that we are at a negative at the end of the day, okay? Now, I also shared something with you all when it comes to the stop loss and the take profit. I also shared something that I use, a tool that I use, and that is the trailing stop loss, because this is used to help us to secure profits while the market is in a bit of momentum and going in our favor, okay? I broke that down in part 4. If you really want to understand how these things work, or you're like, these terms, Leona, you're mentioning, I don't understand, then go back, check out part 4, y'all, okay? Go back and check out part 4, okay? And then the last thing that I wanted to talk about to do a quick recap was position sizing. As a trader in the foreign exchange market and the cryptocurrency market, you're going to hear people use the term lot size a lot. That's just saying that we're putting a certain amount of money into the market, okay? So that position sizing is used to help us to manage risk by controlling how much of our account is being put into each trade. I talk more detail about lot sizes specifically in part 1 of this series. So if you missed any of them, just go back and honestly start at part 1 and then work your way back up, okay? Another thing that I did remind people when it comes to the lot size was to just consider asking yourself this question, like, am I comfortable with losing $100 on this trade, $1,000, $10,000, whatever it is? Like, am I comfortable with losing that amount of money on this trade? And if your answer is no, then that lot size, you can actually lower it and then calculate what your risk potentially will be. And if you're comfortable with that amount, now that's your lot size before you get into the market. But you need to do this before you enter the market, y'all. Don't do it and don't jump into the market and then say, oh shoot, I didn't, you know what I'm saying, calculate what my loss was going to be. This was the lot size that was already there. That's not going to work, okay? You're going to have to just take the lesson, or if it does go in your favor, great. But you need to get in the habit of calculating your lessons first, whatever you potentially could lose first, and then also calculate your profit afterwards, okay? So who is using, I keep getting these notifications coming through on my phone. Who is using the tips and information that I've shared in the past 4 parts of this series so far? Let me know. Let me know in the comments. Let me know in the chat. Drop in the chat if this has helped you at any point, okay? If you're watching the replay again, y'all, please go. You can still comment, okay? Because I'm going to, come back to you, and I really want to hear from you, all right? So your homework assignment from part 4, if you missed it and you're like, oh, shoot, like I watched part of it, I didn't finish it. So now you're going to have a bit of homework that you're going to need to do, but it's okay. The homework was for you to continue to practice identifying the trend, support and resistance on the 4-hour time frame, using your demo account or trading view if you don't have a demo account yet, and making sure that you're doing this with a major currency pair, okay? One that you've selected from part 1 or part 2, all right? Make sure that you do that. And also you are expected to continue applying the RSI, the relative strength index, and then the moving average, the simple moving average, okay? You were supposed to continue practicing using that to see if you can identify the trend or if you're in a consolidating sideways moving market. All right. Again, y'all, listen, if you're like, hey, those two indicators are not two that I'm going to use in the future because you have something else in mind, that's fine. Okay. But at least now you're exposed to two things that are most commonly used in the Forex market. And also the last part of your homework, y'all, was to just pretty much work on establishing your risk tolerance. You got to know how much money you are comfortable with losing on any given day. So that was your assignment. Write it down, but you needed to be honest with yourself. If you know good and well you're going to have heart palpitations if you're down $100, then guess what? You're not ready for that. You might need to lower your risk to, let's say, $75 or $50. Okay. If you feel like, hey, $75 is too much, then lower it again. All right. So that was part of your homework. Number one was establishing, what is my risk tolerance? How much am I comfortable with losing on any given day? The second thing was to practice identifying the risk to reward of at least 1 to 2 or higher for every single trade or potential trade that you mark up. Okay. Or that you take, because there are some people who are tuning into this series that are currently trading, but that's because they started over. Okay, so I need you, if that's you, to continue to practice doing that. All right, now if you're a scalper, y'all, we already know my scalpers out there, they don't follow risk to reward. They have their pip point that they're looking for and whatnot. So I know that doesn't apply to you, but I'm talking to people who day trade like myself or for my swing traders out there. Okay. Lastly, the last part of that risk management homework was for you to consider consistently setting your stop loss and also your take profit on your demo account. And that's based on your comfort, right, with risk and of course the risk to reward ratio that has been discussed. All right. And additionally, I almost forgot. Additionally, there was one more thing. You were encouraged to, use those three things. My gosh, my brain just, I told y'all my brain is like, that's why I gotta have notes right now. Cause if I don't, I'll be like, shoot. Because I got so much going through my head right now. But anyway, so you were encouraged to use three of those things that I mentioned in part 4. You were expected to create your risk management plan. Okay. 2025 is around the corner. I want to make sure everybody is prepared. So who did the homework? If you did the homework, type the word homework in the chat. For those of you watching live, if you're watching a replay, type the word homework in the chat if you did it. Okay. In the comments if you did it. All right. So let's get to it, y'all. We're going to get into, there we go. We're going to get into today's focus. All right. So there's 3 things that I want to cover. Number one, we're going to talk about, how much our emotions can impact our trading, especially, in 2025 with a new administration coming in, and then how we're going to keep them in check. Okay. So we can stay focused, get the bag, move on about our day. Then the other thing we're going to talk about are time efficient strategies to still profit from the Forex market, even if you're super busy like me. Okay. There's a lot of us that have a lot on our plate, and I want to make sure that you still can go get the bag and not feel like, oh, I don't have the time. You do have the time. We just have to figure out how we can maneuver around the things that you have going on to insert this so that way you can go get your money. Okay. And then last thing, we're going to put everything together. Okay. So everything you've learned over the past 4 weeks, yes, the past 4 weeks, we're going to put all of that together because I want to make sure that you all have a solid plan to trade smarter in 2025. Okay. So let's get to it. We're going to get into the first topic. If you're ready, let me know. We're getting into the first topic, and that is emotional control. Okay. So how many of you have ever said to yourself, like, man, if I wasn't mad, like, or if I wasn't angry at the time, like, I probably wouldn't put that trade in. I did it. Like, because there will be times where, like, I'm frustrated and I'm like, I know I got that right, or I know that I was supposed to win that trade, and then I would just get back in. You know what I'm saying? Or like, how many of you have regretted like being a little greedy, like you've been on a good win streak, and you like, well, I mean, the market's still going in my favor, and I'm gonna put one more trade in, and then you get your head knocked off. How many of you been there? How many of you been there? Like, seriously, tell the truth now. Tell the truth. I don't know any trader that is successful today that has not experienced those feelings, had those thoughts. I don't know anyone. So here's the thing, y'all. Emotions like fear, greed, even anger, right, play a significant role in risk management because they can cloud a trader's judgment. Okay. And it can lead to impulsive decisions. Didn't I just say that? That go against a well thought out plan, right? So we want to make sure that we are in emotional control in 2025. All right. So let's go into some of the emotions that can affect our trading and also how we can keep them in check. We're going to go into that in a little bit. But we want to talk about a couple of those things, and that's 3 of them. Number 1 is fear. Fear has an impact on our trading because sometimes fear arises when we are afraid of losing money. Like, how many times have you heard someone say, man, I ain't trying to lose no money? And guess what? That's the very thing that happens because that's the focus, right? So this can, that fear can cause you as a trader to close out trades too early, right? You can probably just sit there and mark up, but you never enter trade. So you're constantly missing out on potential, profits. You're missing out on the bag, right? Or you just avoid taking trades altogether because you're in that you have some trading trauma, to be honest, right? So even if the setup looks really great and your strategy is telling you, screaming at you, take this trade, the fear has paralyzed you, right? Who has done any of the things that I've mentioned before or experienced any of the things that I mentioned before? Type fear if fear has been a factor in your trading at some point. As a matter of fact, I'm going to type the word fear because you know what? That's been me before. Okay, I put that thing in all caps. There you go. So So I put there you go. I see it. It's a little delayed, but I saw it. All right. So there's a way that we can work through it, but I definitely want to make sure that everybody's aware of that. So, you got the examples. I'm not going to go into too much detail on that. Let's get into greed. Listen. Whoo, child. I'm gonna ask a question afterwards, but greed, y'all, is really, really huge. It's an emotion that sometimes can really linger for traders, especially when you experience win streaks for so long and as a beginner. Greed definitely can impact a trader to a point where you may become overly focused on maximizing profit. You may take bigger risks than you usually would or that you can afford. How many times have you I actually had someone ask me, well, would you raise your lot size if you know the trade is going in your favor? Y'all, none of us know what's going to happen in the market. We're taking calculated risk. We're using data to help guide our decisions, but there is no guarantee in trading. And so because of that, especially when you get to that point where you're experiencing a win streak, if you have not gotten to the point where you're good at managing that and keeping that emotion at bay, greed can cause you as a trader to hold on to winning trades way too long. Because you're like, I know I'm right. I've been winning, right? You know what I'm saying? So listen, y'all, the only way to combat these things are to, number 1, be mindful of them, and then also take a bit of inventory to see, am I experiencing fear? Am I experiencing greed? You know what I'm saying? And then say, well, how can I pull myself out of those things? All right. Anger is the last one. I'm gonna get into that one. Anger is another emotion that a vast majority of us traders experience. Don't feel bad, y'all, if you have experienced this before. It's part of the journey. All right. The only problem comes when you are not learning from the lesson that should be learned when you are experiencing, let's say, anger, because this anger tends to trigger what we call revenge trading. How many of you have experienced revenge trading? Like, I want to just throw this out there. Revenge trading, or that anger that you feel at the market, it leads to more losses, y'all. So you may have a risk management plan, you may have a trading plan, and all of that goes out the window when you start to revenge trade. I'm gonna give you an example. Let's say, you lose a trade, and part of your trading plan was, hey, listen, and risk management plan was, if I lose my first trade when I go into the market, I will not take another trade. Here's why some people may do that, because I'm one of those people. Here's why. For whatever reason, it just does something to me mentally, like, God dang, it's like a blow fast. You know what I'm saying? So it's harder for me personally to pull myself out of that. Dang, you know what I'm saying? When your first trade is a lesson. Okay. Now, here's the thing. If you decide to go against that and tell yourself, nope, I'm going back into this market and I'm getting my money back. Like, the market about to pay me what they owe me, right? And then you re-enter, more than likely, that trader is going to re-enter and not follow their steps to their strategy, definitely not following a trading plan. And I'm telling you now, that leads to more losses, and they're unnecessary. Y'all talked about, the different fear, the different emotions and all that stuff. I talked about that in really great detail in my trading trauma series. Y'all, you can check that out here on YouTube. Just go back. I want to say I did it for the month of, this is November. So I did it for October or September. One of the two. It was either September or October. I did that series. Go back, check that out, okay? If you missed it. Now, let's talk about how we're going to keep these emotions in check. So we know there's fear, there's greed, and then there's anger. We know those three. There's a certain cycle that I talk about, like that traders can experience, but that's more in teaching mode, like not this. But let's talk about how we're going to keep these emotions in check. Number one, the first thing we got to do is create a plan and then follow that plan, and make sure that plan is clear, y'all. Okay, like seriously, set rules. If you have rules within your trading plan, now you're less likely to get caught up in fear. You're less likely to get angry at the market. You're less likely to get sucked up into the greed. Okay? Because your rules are going to say, hey, look, I'm only entering when the market shows me these things because of your strategy. That's number one. I'm going to exit the market when it shows me these things. And that's according to your what? Strategy. Okay? I'm only putting a certain amount of money into the market. You know what I'm saying? So now I'm less likely to have fear of what? Losing money, because I'm comfortable with the risk. Oh man, I'm jumping the gun. See, this is why I gotta have notes, right? I'm jumping the gun, right? So having that plan, though, it helps us to really manage our trades. And if we stick to that plan, no matter what, okay, we avoid falling into the fear, falling into the greed. We avoid falling into that anger, that revenge trading. Okay, so that's number one. Now, the second thing, which is what I was about to jump into, which is the risk to reward. This is how we're going to help keep those emotions at bay. Right? We're gonna hit the Heisman on them, right? Because we are making sure that we are identifying our risk, and we are utilizing a risk to reward ratio of at least 1 to 2. That is the bare minimum, y'all. For day traders, swing traders, the bare minimum is 1 to 2. As a day trader or swing trader, we should not be doing 1 to 1. Leave that for the scalpers. Okay? Leave that for the scalpers, because some of them ain't even doing 1 to 1. They're not even thinking about a risk to reward. They're just like, hey, look, I'm looking for 10 pips. Does this have the potential to give me 10 pips? Yes. All right, cool. I'm running it. Okay. They don't utilize stop losses. Some of them, not all, y'all. Some of them don't even utilize a stop loss. They have a mental stop loss, but they don't input a stop loss into their broker account. Okay. So this is for my people who day trade and swing trade. Okay. When we do that and we set those limits on how much we're going to risk and how much we expect to gain, y'all, this reduces that emotional pressure. I cannot tell y'all how much I felt like, oh man, because, or how I felt so much better because I was consistent. I grew consistent with identifying trades that have the potential to give me a risk to reward of 1 to 2 or higher. Okay. So remember, y'all, we talked about all of this in part 4. If you miss any of this, and I gave really great examples like numbers of this risk to reward, if you miss any of that, go back, watch it, y'all. You don't have to watch this whole live. Pause, go back and watch the ones that you missed, and then come back to this and watch it from the beginning. Okay. The other thing that we want to talk about on how to keep our emotions in check. This is like I'm not gonna say my favorite thing, but one part of it is my favorite thing. That's using the stop loss. That's using the take profit. That's also using a trailing stop loss. Okay. I talked about these terms, giving you what they were and how to use them. I gave you that in part 4. But listen, y'all, setting that stop loss, making sure you identify where your take profit points are and putting them into your broker account. Doing that ahead of time, though, it helps to remove that emotion, like being worried and stuff, which leads to fear. Okay. Being overly, confident, which leads to greed. We can make better decisions before we get into a trade and also while we're in the trade. Okay. So this is why I say set it and forget it. Set your stop loss, set your take profit point, and if like for my day traders, swing traders too, for sure, scalpers, I got it. Y'all don't use that, because you're 10, 15, 20 pips, like you're not looking for big gains, right? So, but let's say, you're looking for a trade like 60 pips or greater or something. Well, now you can activate what I introduced to you all on part 4, a trailing stop loss. So when the market moves in your favor and the momentum is there, whether the price is going up or down, whichever direction you saw fit, you know what I'm saying? When the price is going in your direction and the momentum is there, you can also, if your broker allows it, you can also activate a trailing stop loss. So now as the price moves more in your favor and closer to your profit point, the trailing stop loss now takes your stop loss that you had and moves at whatever amount of pips you say you want it to trail, whether that's 10 pips, 15, 20, 50, whatever it may be. Okay. And now you're going to go from being at break even to 10 pips in profit, to 20 pips in profit, to 30 pips, so on and so forth, right? Until the market turns around and then hits that trailing stop loss. So now you secured the bag and you didn't have to sit there and watch your chart. You didn't have to sit there on your phone like, did it move yet? Did it move yet? You don't have to do any of that, right? So this is why I love the trailing stop loss, because not only do I set my stop loss and my take profit, but for things like Bitcoin, I use the trailing stop loss religiously because it takes time sometimes for Bitcoin to fully make the move. And then sometimes it happens within an hour, but I don't have to think about it at all because I can utilize that too, right? And then another way, got 2 more things, y'all. Does this keep me on track? Another way that we can keep our emotions in check is by sticking to our lot size. Remember how I said that in order for us to not risk more than what we're comfortable with, I suggested Because again, y'all, I'm not telling you what to do. I cannot tell you what to do. I can only tell you what I have done and that what has worked for me to help me keep my emotions in check, right? And I'm emotionally detached when I'm in a trade now. Okay, that only took 4 years and some change to have it, but hey, we're here. Right? So I suggested that you input you identify, calculate what your risk would be with your lot size that you have right now, and see how that translates into your country's currency. And for us, that's dollars. So if I say, hey, look, I'm planning on using a 0.45 lot size with this amount of pips. Well, with this amount of pips at this lot size, I stand to potentially lose $350. I'm not ready to lose $350. So now I'm going to lower the lot size, calculate that according to the pips for my stop loss, and then say, okay, now instead of it being $350, that's $250. I'm more comfortable with losing $250 today. All right, cool. So now that's going to be my lot size. Then I will also do the same thing for my profit. Okay. So if my take profit should be twice, right? Whatever my risk is. So if I'm comfortable with losing 250, then that means the number of pips with that lot size should give me $500 or greater. If you calculate the potential loss first, y'all, you're less likely to be like this when the market is going in the opposite direction or there's a pullback, right? While you're in a trade. Y'all, I'm gonna tell you something. And this is something else I mentioned too. During this, when you're trading, y'all, as a beginner, this is something I was not told, and I'm gonna reiterate this again. As a beginner, none of us, okay, none of us should ever, as a beginner, be risking more than 1% of our trades on any given day. Okay, we should not be, as a beginner. Now, if you've been trading for a while and you've been consistently profitable, then I got it. Now you can up it to 2%. Okay. Me personally, I would tell people, once you've been trading for a while, I would not risk more than 3%. I don't care what you're trading. I would not risk more than 3% of my balance on a trade. That's just, to me, I feel like now you're being greedy and you could potentially put yourself in a position you don't want to be in. So 3% should be the max for people who've been trading for a while. 1% needs to be your focus as a beginner. Everybody got it. I don't say this, I don't know how many times, and I'm gonna keep saying it until it's ingrained in your head. As a beginner, you should not risk more than 1% of your account balance on any given trade on any given day. Okay? So I need you to stick to that. All right. So last thing, when we're talking about maintaining that control, how can we manage our emotions and stay in control when we're in a trade? Take breaks, y'all. This is something that, and this is part of my plan. If you take a lesson, even when I win trades, y'all, I've gotten to the point now where, especially if I have a really big win, like this was last week. I think it was last week. I got over like 1,000 pips on Bitcoin, trading Bitcoin. Do y'all think I put another trade in? Even though I saw gold was moving, I said, do you think I put another trade in? Heck no. I closed my broker and everything and went on by my business. Because I just sat and bagged 1,000 pips. I'm not about to go and say, oh yeah, let me go make. No, I'm keeping my money. And I went on about my business. And y'all, even for me, if I take a lesson, like let's say I win a trade and I'm like, oh, okay, you know what I'm saying? I see that there's another opportunity. The max amount of trades I would take in a day, especially after I've won one, is 2. And that's if I win, but like I got stopped in profit and it wasn't, like it was probably like 20 pips or something like that. Then I'll probably look and see if there's another opportunity. If there's not, I'm cool, but if there is another opportunity, then I'll take it. If I lose that trade, the second one that I take, I'm done for the day. I don't care if it ended in profit or loss. I don't care. I am done trading for the day. That's me though, because that helps me to take breaks, so that way I'm taking the time to like refocus, right? And this helps prevent me from making those impulsive decisions that I used to do when I would revenge trade, when I was being greedy in the market. And I would win a trade that was massive, and then I'm like, shoot, it's still going. Let me get back in. No, I don't do that no more, y'all. Okay? So here's the thing, y'all, just to wrap all that part up. Remember, with fear, greed, anger, all of this can lead to us making poor trading decisions, okay? And ultimately, it can hurt us with getting the bag, okay? So the key to this is just keeping our emotions in check by following a clear plan, okay? Being disciplined with that plan, okay? Making sure that we have risk management in place. We are aware of our risk tolerance. We're using the risk to reward ratio of at least 1 to 2 consistently for my day traders and swing traders, right? Okay. We're setting our stop losses and take profits. Even if you want, if you are a day trader, consider using the trailing stop loss. I'm telling you, y'all, it makes a world of difference. It's like a weight gets lifted off of you when you put all of these things together. And this ultimately helps to us like trade with confidence, y'all. And we are in control. And that ultimately reduces the influence of emotions. We're less likely to be greedy. We're less likely to revenge trade. We're less likely to fear the market and miss out on trading opportunities, because we got everything in place and we're doing it consistently, right? Everybody got it? I hope y'all do. I hope y'all do. Let me know if you're going to be managing your emotions better in 2025 when you're trading. Let me know. Say, yeah, Leona, listen, these last 50 some odd days, I got this. I'm working on managing my emotions, period. I'm doing everything you said every single time I'm about to enter the market. I'm doing it while I'm in the market. That's it. That's all. We gonna crush it in 2025, right? All right, so let's go. Look, if you're finding this information helpful, okay, don't be stingy, y'all. I said that earlier. Sharing is caring. Make sure you share it. Share it, people. I am so certain you know at least one person, okay? If not two, if not three, but you know at least one person that's traded in the past or that wants to trade, and they need a little guidance. All right, just send it to them. If I'm for them, I'm for them. If I'm not, that's cool. You did your part. All right. Last thing, and then we're going to get into the homework. Not the homework. Last thing, and then we're going to go to the charts real quick, and then we'll get into the homework. So last thing, right? I want to talk about a couple of strategies, just kind of like an overview of everything we have covered so far. I want to talk about time-efficient strategies for you as a busy trader, right? So we are going to apply this technical analysis with limited time. That's what we're looking to do. We're looking to keep it like 15 to 30 minutes max, but definitely like if we can get it 15 minutes or less of us getting on the charts, going to that 4-hour time frame, identifying support and resistance. Or if you do top-down analysis like I do, then do that, okay? And then going and saying, all right, let me check out this particular technical indicator. So if you want to continue using the RSI, all right, let me place that on the time frame that I'm trading on. If you want to continue to use the moving average, whether that's a simple moving average or there's another one called exponential, then great, let's do that. We want to consistently do that though, so that way we're not constantly watching the market. That's how we get our time back, y'all. We have a system in place and we do that every single time. We get faster at it, and now we're able to cut down the amount of time we're on the charts, right? The other thing that you can do is use price alerts. So there's a way for you to use like TradingView. You can use apps and whatnot to help you to stay updated on important market moves, right? So even when you're not near the charts, there should be a notification coming to your phone, right? If you're not near your laptop, if you're not, not near your iPad, it should come to your phone. So you can use TradingView to help you do that. Y'all, you can also go to your App Store or Google Play Store, and you can get stock alarm, right? You can get FX alerts. Now I know stock alarm, I just got that recently. That one is free for now, okay? Because the other ones I had, they were free at first, and then I want to say 2023 they were no longer free, okay? But they're like $5 or something like that. So, but still, I'm not here to count anybody's pockets, all right, and their coins and whatnot. So just look at that. But stock alarm is free. You can use that for prices for cryptocurrency, forex, and of course the stock market. All right. And then the last part y'all want to talk about before we put everything together is risk management. Okay. So I'm gonna give you a couple of tips, especially if you have a busy schedule. Number one, y'all, listen, set your stop loss and your take profit points within your brokers. Okay. Do that every single time. You are less likely to lose more money than you anticipated because you set a stop loss. Okay. You are less likely to lose money in general, especially if you're going to be in a trade that's like a 1 to 3, 1 to 4, 1 to 5, if you activate a trailing stop loss. Okay. And you have your take profit points set up. Okay. This helps you to be able to monitor the trades when you're not available. And then your broker is going to kick you out when you hit either your stop loss or your take profit point, or if it hits your trailing stop loss. Either way, the broker's going to do that. And y'all, get in the habit. This is part of the risk management too. Get in the habit of using your apps on your phone. So your broker should have an app on your phone that you can use. So that way, if you need to adjust something, you're like, oh, shoot, I just realized my stop loss was too far. Let me go in my phone and change my stop loss. Oh, shoot, my take profit point is wrong. Let me go in my phone and change my take profit point, okay? And, you know, you can kind of tune in and check it out here and there or whatever. But this way, if you need to make an adjustment, you can do that. So use the apps on your phone as well, all right? So that's it. That's all. We're going to put this all together. Preferably, we can do this in the next, like, let's say 5 minutes, okay? Preferably, we can do this in the next 5 minutes, and then we will get to the homework. And if y'all have any questions, right, then that'll be the time to do that. Okay, so let me pull up TradingView. And then if y'all want to put a currency pair, a major currency pair, because remember, that's what we're focusing on. Major currency pair, put that into the chat. Which one do you want me to go and do the the support and resistance on? And also apply the there you go, and apply the moving average and the RSI. I'm trying to do this now. Go ahead and put that in the chat. Okay, I pressed the wrong button. I'm coming, y'all. I'm coming, because I said I want to be done in 5 minutes. I'm coming. It don't take me long to mark up. So all right, if I don't see anything in the next 10 seconds, I'm moving on, and I'm just gonna stick with Euro USD. All right, Euro USD it is. Okay, so let me delete this. Oh, let me take this off. I need to close this too. Let me do a different one. Oh, Wanda, there we go, because I don't use that one. Okay, so I'm going to do a new support and resistance. So I'm going to go to the 4 hour. Remember, that's the goal. We at a bare minimum, we're going to the 4 hour to identify support and resistance. So remember, y'all, with support and resistance, okay, if you remember, how many touches should you see at support and how many touches should you see at resistance for you to say, okay, this is a strong support, this is a strong resistance? If you can't, do me a favor, I'm gonna give y'all a second before I do this. Type it in the chat. If you're watching replay, type it in the replay. Type it in the comments. Type it in the replay. Type it. How many point, how many times do we need to see price hit an area to say this is a strong resistance or this is a strong support? Give me that number. Give me that number. Give me that number. Y'all got 2 seconds. 1, 2. I should say 1 Mississippi, 2 Mississippi. If you said the answer is 2 or more, you are absolutely correct. The bare minimum is 2, y'all. So to help you, remember we talked about going to the line chart. We're going to go to the line chart. Bam. Now, I want to see how many times did price go above here, where it's at right now. How many times did it go here, above here, okay, and then push back down, all right? And then I'm going to do the same thing in support. How many times below where price is right now did price come down, but didn't keep going and push back up? All right, so this is where we are right now. This is a blue dot. So I'm going to get me a horizontal line. And again, if you need help with that and you're like, Leona, I don't remember this, go back and watch the replay from part 2. No, part 3. My bad, part 3, because part 4 was risk management. So yeah, so part 3. Part 3, we talked about support and resistance, okay? So look, I have, this is where price is right now. Okay, so I have 1, 2, 3 touches right here in resistance, meaning price came up, pushed down, came up, pushed down, came up, pushed down, came up again, kind of went over it, pushed down again. Okay, finally broke out of it. So that's pretty much 4, right? And then it broke above the ear, but then came back down. Okay, so that's my resistance. Bam. So resistance 4 hour. Cool. If you following, let me know. Say I follow, Leona. I'm following. I'm following. I'm following. All right. So below here, we want to find 2 points where price touched. Okay. And then bounce back up. So I see right here 1. And price came up. It got close. Didn't quite do it. Came here again. Came up. And then finally broke through it. Okay. So this is our support. Uh-oh. That's not what I meant to do. All right. Everybody got it. Support. 4 hour. All right. So there we go. So now I have my support. I have my resistance. Okay. Now, if I saw there was more, then I would have utilized that. So like, look, let's see. So it got close. It didn't quite do it. Okay. All right. So now candles, bam. Okay. So now I'm going to drop down to the 1 hour because as a day trader, I know that I'm trading on a 1 hour time frame. Each candlestick represents 1 hour. So I'm anticipating 1 hour of movement to say, yes, I should be buying. No, I should be selling. Okay. So looking at this, we have price has gotten to our resistance, but pushed down. Okay. And it's currently in a sell position, right? Red means sell, green means buy. So price has been coming down. It's not really doing much of nothing. So how do I know when there's an opportunity for me to enter the trade in either a buy or a sell if I only use support and resistance? I can use these indicators that I told you. So let's go to RSI first. Okay. Remember, y'all, you don't have to change it if you don't want to. Okay. The average for the overbought area, remember with the RSI, is what number? Type it in the chat for those you watching live. Type it in the comments for those of you watching the replay. For an overbought area, what is the average number that is used by most traders? By traders. If you said 70, you will be absolutely correct. So 70 is here. Okay. So if I'm looking for a potential sale because it's been buying too long, it's been overbought, it's now in overbought territory, I need to see that price comes up here. So I see it right here. All right, cool. I'm gonna do this line real quick, y'all. Okay, so I'm gonna put it right here. Okay, or here, right before it drop. Oh no, it ain't gonna let me do it. There you go. Okay, so this is an overbought territory, right? If I'm expecting it to go down, then that means the price has been high too long. So let's see if there's an area on the RSI that is underneath what number? What number says it's oversold conditions and we should be looking for a buy? If you said 30, you will be absolutely correct. Y'all, some people use 20, some people use 60. It's totally up to you. But the average is 30. So that means this dotted line down here represents 30. So anything underneath here tells us that price has been buying for too long. Price has been selling for too long. And so there's a potential for price to push up. Okay. So I'm going to put a line here. This is super red. Super red. So I'm going to put one here because this is where it started to come up. Okay, cool. Actually, hold on. I want to get the point. There we go. Okay, so that's where we're at. Okay, so cool. So now this is letting me know, okay, current price right now, do we have that? No, we're not in overbought areas. We're not in oversold areas. But let's look at the past. So y'all can see this. So when it was in overbought territory, we're anticipating a sale, right? Did we see a sale? Yes, we did. For me, I use candlestick patterns, but whatever your strategy tells you, by all means, you use that. But for me, I use candlestick patterns. Well, guess what? A candlestick pattern appeared here. So we had our overbought territory here. So we're waiting for the sale, and we have a bearish engulfing appears, and then it's a slight confirmation. Let me see. I don't like it though. Okay, so but anyway, it's a red candle. But yeah, so if this had a bit more body on it, I would have said yes, this is a good confirmation. I don't like when it's doji candles that's confirming. No. So anyway, but yeah, if your strategy says yes, once the engulfing finishes, then I enter the trade. Okay, run it. Okay, but this just told us price did sell. Okay, now we're in oversold territory here. Did we see a legit buy? I mean, price did pull up, but it did what? It ended up consolidating. Now let's use the moving average. So I'm going to put in moving average, and then it got simple. Okay, so let me close this out. Now you can use an exponential moving average. You can use a simple moving average. Y'all, you can Google that to see what the difference is between the two. Okay. And you can also do your research to see what would be a better moving average. 21 days, 50 days, whatever that is for you. Okay. Some people use multiple moving averages as well. But it's totally up to you. You'll figure that out on your journey. I'm just giving y'all a foundation. Okay. So let's say I'm like, nope, I want to do a 21-day moving average. Okay, cool. Got it. I told y'all what moving averages mean, so we're not going to, dig into that. Okay, so now this is telling me that after that oversold condition, right? Well, the moving average is still above the candlestick, so we should see more selling. Then guess what? After that, it did what? Pretty much flatline. And now start to curve up. So that tells me we're in a sideways market. We don't trade in the sideways market, especially if there's not a ranging market where price is going up, hitting an area, reversing and coming down, hitting that same area, coming back up, hitting the same area again and come back down. Okay. That is a tradable market. Where it's not giving you any clear direction like that, it's not a tradable market, which means Euro USD would not be something you would trade right now. Okay, so that means you would activate your trading plan and says, hey, my strategy tells me that if I don't have a clear direction, a trend, or a ranging market, I don't trade. So guess what? You move on to something else, or you don't trade that day. Whatever you're feeling. Everybody got it. So now let's say our strategy did tell us that this was a good trade. We're going to enter this trade. Okay, cool. So I'm going to enter, let's just hypothetically say, I'm going to enter this trade once this one closes, right? Give me a second, y'all. I'm going to remove this now, okay? Because we've already identified that. So we're going to enter this trade, and let's say, okay, so this one hit that. So let's say I'm going to use the support as my first potential profit area. All right, cool. So if I'm going to use the support as my first potential profit area, well, I need to identify my stop loss. I'm going to use here as my stop loss. This is 100 106 pips roughly. So I'm going to make a line and I'm going to make it red. All right. If y'all still with me, let me know. If you're still with me, let me know. Say, I'm here, Leona. Okay. So this is going to be our stop loss. So if price were to push up and start buying, the broker should kick us out. Okay. Because we're going to put our price point into our broker account. Okay. And then that's letting them know if price comes up instead of going down, kick me out the trade. And I'll just take that lesson for today. Okay. All right. So we know this is 106. So that means from here to here, we need it to be how many pips if we're doing a risk to reward of at least 1 to 2. That means we need to see 100. We need to see a 212 pip move potential. So let's just calculate from here to the support, because we say, oh yeah, this is gonna be our first one. That's 61 pips. That's a long way away from 212, right? So now, where do we need price to go in order for us to say, yeah, this is it? We need to see price come way down here somewhere. If you have been trading, let's say Euro USD for a while, you've been back testing and whatnot, do you think that you would get that in a day's time? If your answer is absolutely not with the data that I have, and you're a day trader, do not dare put this trade in. Why? Because that goes against your trading plan. You want to be in and out of the trade within a day, within 24 hours, and you want to maintain a risk to reward of 1 to 2. You can't get a 1 to 2 with Euro USD and this move in a day, right? This is where the discipline is going to come in, y'all. The consistency is going to come in, and then the profit will follow. All right. So this, you're putting everything together. Everything together. I don't have enough time to do the calculating with the lot size and whatnot, but I will say this, y'all. Just think about this. In the Forex market, I believe I did go over it. I did go over it. But I go into more detail in my day trading one-on-one program on how to calculate your lot size with the pips to get your dollar amount. Okay. Y'all go Google it if you need help. You know what I'm saying? If you're like, I don't want to pay for, I don't want to pay $99 to get educated on the stuff that you're talking about and how you trade and all that stuff, then go get it for free and Google it. Okay. If my lot size is 0.01 and my stop loss is 30 pips, what would be the dollar amount that I could stand to lose? Go Google that. Put it in Chat GPT. I don't care. If you don't want to pay for free, then go do that. I mean, if you don't want to pay and you want to get it for free, then go do that. Okay? But you need to know the lot size amount, the number of pips that will give you, when you multiply that, you're going to get your dollar amount in loss, but also in potential profit. Okay? Everybody got it. This is how you put everything together. Okay? Hopefully y'all good, because we're about to wrap this up. Let's get to the homework. Okay? Homework time. I hope this was helpful. If it was, great. Thank you. I'm glad it was helpful. Okay? If it was, great. If so, y'all, honestly, continue to, number one, share this live stream. Seriously, somebody else needs this information. Don't just be a hoarder of information. For real. That's not how you get more out of life. You get more out of life when you give. So send this live stream to someone that you know is on the verge of throwing in the towel with trading, or they probably did. They was just like, yo, like, that ain't work for me. I don't lose too much money. You know what I'm saying? This is free information. You know what I'm saying? If they want to learn, they can do all the free stuff until they build their confidence back up. They can even watch the Trading Trauma series. Y'all can share that with them. Okay? Because I'm pretty sure there will be something that will resonate with them in that series as well, especially if they have some experience with trading, but they just didn't have the results that they wanted. Okay? And if you know somebody who's been talking about they want to learn, but they're like, I don't know where to go because there's so many people talking about trading, especially in the Forex market and whatnot. I don't really know who to trust. Y'all Y'all send them these live streams. If I'm their cup of tea, if my vibe fits their vibe, then great. If it doesn't, that's cool too. But you did your part, okay? And then feel free, y'all, to hit the subscription button if you have not done so yet. All right, subscribe if you are finding this information, and definitely this exercise, putting everything together, if you have found that helpful. All right, so homework. Y'all, what you have been doing for the past 4 weeks, I need you to continue to do it. Continue to practice. Continue to practice identifying trends of sideways markets, okay? When the market is moving a little up and down, but not so much, okay? I need you to continue to practice finding and identifying your support and resistance. Do this on the 4-hour time frame or higher, depending on the time frame you're trading on, okay? Lower time frames, like if you're trading on an hour or less, do your support and resistance on the 4-hour. If you're doing your trading on a 4-hour, then do your support and resistance on the daily, okay? But make sure you're doing this in either your demo account or you could use TradingView, okay? And then also continue to apply the simple moving average or the exponential if you want to learn more about that, or the RSI. And this is only if you're like one or both of those things I find helpful to me and useful to me. If you're like neither one of them is for you, that's fine. Disregard it. Move on. Learn about some other indicators if you want to, okay? There are certain things that I use, that I teach in my programs and whatnot. I share that. If you want to learn how I trade specifically, especially with the candlestick patterns, y'all, click the link in the description of this video and then go ahead and register right now, and get 30 days of trading information, 30 days of trading lessons, okay, to help you go from not knowing anything at all about trading to, oh man, I think I can do this. You know what I'm saying? You should be able to do this after that, okay? And then also with the risk management, because we talked about technical analysis with the risk management, make sure y'all, I know that may not be a popular opinion and you want to just be like, I just want to go. No, calculate your potential loss first. Then calculate your potential gains. I'm telling you, this is going to save you a whole lot of heartache. You won't be as fearful in the market. You won't be feeling that greed as much. You definitely won't be angry at the market because you're comfortable what you potentially stand to lose. Okay. And then also, y'all, when it comes to the risk management piece, with this, don't forget to continue to set your stop loss for my people day trading and for swing traders. Set your stop loss. Use a trailing stop loss too. Okay. If you're really good at it and your broker allows you to. And for everyone, set a take profit point. So that way you're not sitting here like this. Did it hit my profit yet? Did it hit my profit yet? No, you ain't got to do that. Set your take profit. Okay. This way you can get comfortable with the risk to reward. All right. For my day traders and swing traders. And again, we're managing those emotions. Right. Last thing, y'all, take notes. You need to document how these trades play out. Document how you were feeling before the trade, during the trade, after the trade. Okay. Document the results. Do all of that and use this data to help you to trade smarter in 2025. Okay. And as you use that data, you should now be able to make adjustments as you see necessary. All right. So that is it. That is all when it comes to this series, y'all. If you learned something today that you did not know yesterday, please let it be known. Type that thing in the chat or type it in the comments if you're watching the replay. Remember, I'm going to do a quick recap on this particular series in general. Y'all remember, y'all, technical analysis helps us to properly identify trends, areas of support and resistance. It helps us to identify potential reversals in the market. This helps us to make a decision on where we would enter the trade and where we want to exit the trade. And also, y'all, second thing, keep in mind, risk management protects our capital. We want to keep more of our money than we give it back to the market, okay? And it helps us to stay consistent. So now we can see consistent profit for the long term and not just, oh man, I had a great month and then the rest of the year was trash. All right. Last thing, y'all, remember both of these skills, all right, when applied, okay, can help us to limit the amount of time that we're on these charts. All right, so let's do it consistently. The more we practice it, the less time it's going to take us overall for us to be on the chart. All right, so that is it. That is all. Does anyone have any questions? If you're watching a replay, still type your question in. All right, if you're watching a replay, still type your question in. I will answer it at a later time. But if you are on here live, if you have any questions at all or comments, but if you have any questions, feel free to type it in the chat. I'm going to give y'all a minute to type it in the chat. Okay? Give y'all a minute. But y'all have your homework assignment. Okay? And your questions will be answered if you have any. I'm going to give y'all a second. But it's time, y'all, to put this stuff into practice. Okay? 2025 is around the corner. And I want it to be a great trading year for you. Seriously. But the only way that's going to happen is if you take what you have learned, take this information and you implement it consistently, because consistency is the key. Being consistent is going to help you be disciplined. All right. And also, y'all, just build on this foundation and then make it fit your trading style. You know, there are more than one way. There's more than one way to get to the result that you want. I'm just showing you one of the ways that you can secure the bag from the market, okay? Because these past now 5 weeks of this information is giving you one way that you can do it. But trust me, there are other ways that you can get to the bag, okay, when you're trading in the Forex market. All right, so I don't see the questions, so we're going to wrap this up. Y'all. I'm going to end this with thank you for tuning in live, and for those of you that have been tuning in, watching the replays. Thank you all for sharing. Thank you all for commenting. Thank you all for the thumbs up. You know what I'm saying? Thank you all for the likes, the hearts, all of that stuff. Thank you, thank you, thank you. Don't let this be your last time tuning into this YouTube channel. Share, share, share. Continue to share, and also continue to be a student. All right? So I'm going to leave y'all my favorite quote, and that's from the legend. His name is Arthur Ashe, and he says to start where you are, use what you have, and do what you can. I'm going to see y'all next week for the next series that's coming up. I hope y'all have a really profitable trading week and remainder of this trading year. All right, let's get it, y'all. Let's go. See y'all next week.